Hey guys, welcome back. Welcome to the channel. If you are new, let me just give you a quick recap. This is my dividend investment portfolio. I'm going for a goal of $10 a month in passive income. I started off with an initial seed of $2,000, and I'm going to grow it from there until I reach my goal. Now, I do expect to hit that goal. I have projected my calculations, but it's not actually confirmed in the system yet, and I'm gonna wait until I get that confirmation before I say I achieved my goal. So anyway, let's give a summary today. For this episode, I plan to go over the portfolio and to do something a little different, which is to dive deeper into one of my holdings and give the analysis, give you some of the resources behind the decision of holding this pick. So you'll find out more about that later on. Anyway, let's dive in and let's get into this episode. Okay guys, now we're at the main page here. We can see a quick summary of what Apple Hospitality REIT is about. We can see what they have in their portfolio here, and I'm gonna dig into some of the tabs, not all of them, but most of them. We're gonna get a good summary, a good idea of how to break down what's going on with Apple Hospitality REIT. Starting off with the About Us, you see that they are a New York Stock Exchange company. You see that they offer 234 hotels, which is about 30,000 guest rooms. They're located in 87 markets, and you can see that the different brands that they carry, like Hilton, Marriott, Hyatt, all high-end, mid to high-end range hotels. And yeah, this is, it's just a quick snapshot about them. Their mission and values is even more concise. One of the things I really like is that they talk about dividends and long-term capital appreciation. This is super important for me in terms of my portfolio, because those are two things that I'm focused on, right? Dividends and then long-term capital appreciation. I like what they did here. They kind of just redefined the word REIT. It's kind of cute. It just sums them up. They try to keep their values really simple, and simple values are way more achievable than something too complex or too abstract. Their leadership page is also very important. You want to see who's running the ship here. You want to get a good sense of who these people are, and they definitely have their profiles. You can read more about them. So make sure if you on your own time, go through some of these profiles, see what's going on, see at least at the high levels what these people are about, making sure that what the direction they want to take the company in, it's still in lines with your portfolio. So that's important. All right, I'm not gonna go over that. This is nice. So they have their hotel map here, and you can see where they are in the country, where they're spread out, and you can see where they're clustering some of their properties, and if their properties are in good populated areas, or if they're in certain areas that are advantageous for these hotels. But they seem pretty spread out, and this is good because you don't want to have, let's say, all their portfolio in one or two states. If it's dependent on a particular vacation season, let's say if it was in Disney and all of their hotels were located there, and Disney was either booked up or maybe their park closed or something like that, then they would lose all their revenues based on that, based on some other factors. So being spread out is good. It allows them to protect themselves from any one particular type of season or changes in a certain part of the country for whatever reason. If you go further down, you can see the information that we kind of got on the front pages here. You can see the different locations where they are. You can visit the sites if you really wanted to, which I think is pretty cool. Just set up an appointment, go down there, say I just want to check it out, and you can see what kind of operation they're running, and really see if it's for you. But I don't think you're gonna have a problem knowing that the different hotel chains that they're working with, there's going to be a certain level of expectation in terms of service and in terms of the product that they're offering to the client. Yeah, this page is pretty long, so I'm not gonna go through all that. I'm just gonna go right back up to where we were. Here you can get just another quick snapshot of what's in the portfolio. Again, like I said, we're talking mid to high range hotels. I'm sure you know of 2, if not 3, of the hotels mentioned here, which is a good sign that they're known, and that you're going to have people who are that want to stay at these places, right? So you're not going to have some no-name hotels here, or just them setting up these facilities on their own. They actually are buying into a system so that they can offer a great product. Right. Their investor information page, it's kind of like, if you can feel it, it feels like it's a different site altogether on its own, right? And rightfully so. The information here is going to get a little bit more nitty, a little bit more gritty in terms of what they offer, what they tell you, what's going on. I'm going to go right down here. You can see right here, you can see their 10K and their 10Q. Now these are going to be their quarterly and annual reports. I highly recommend going into there and seeing what's going on. They have their investor presentation. I mean, this is a really nice glossed overview of what direction they're going into, or where they're at in terms of their liabilities or expenses or their growth plan. So that's something you want to check out. And I'm gonna just go into their their 10K filings with the SEC, and just to kind of give you a quick look at that. So here I've already picked out a page within this document. This document is about 93 pages here. This is page 32, and you can see really quickly, they talk about their revenues here for the year. They talk about their expenses. They talk about their per share amounts. They talk about their balance overall and some other financial data, which you want to dig through. You want to be able to do a comparison from a few years ago to today and make sure that they're still growing, which if you look at their total revenue from these other points in time, you can see that they are growing. Now keep in mind that their other expenses, their liabilities are growing as well, but overall it looks like they're pretty healthy. Another page from the same document, at page 52 here, is you're going to see that in a quick, assets, liabilities, shareholder equity, and the whole thing put together, and you can see that what they have in assets and liabilities and what they're paying out is equal to what they're making. So just something to think about, which is not uncommon for a REIT. You're going to see that they're going to have really high payouts because they want to avoid paying taxes on these things. It's just keeping in line with some of the regulations by the government. Okay guys, let's go back to the main site now. Yep, so again, you have your materials here for your reports, you have your news here. You can also get that information up here in these tabs. And what we just looked at was really the SEC filings, which they have their own. You can pull this stuff right here. You can go down here and you can click this link here, and you can download. You can look up their history here and get each of the reports so you can see what's going on for yourself. Again, just annual reports here. I'm not going to go through these. You can check them out for yourself. But we're gonna look at some of the other tools that I use in order to analyze different holdings in different companies, and those are gonna just really make it really simple for us to get the information. And then once we determine that we do want to go with this company and we want to dig a little further, then we'd come into these reports and we give a little bit more analysis in terms of making sure that everything just kind of matches up. They have their stock information, and they offer like a chart right here, and you get all the main information up here about what's going on. But I find that, again, like I said, the tools that I use, which I'll go over a little bit later, those give a much easier read on what's going on, so you can look at it visually. It's more appealing to the eye, and I like that in terms of being able to absorb the information. A lot of people absorb information differently, and it's a very robust tool that's going to offer a lot of information right away, and this is going to be really great. As you can see right here from the summary, I get all the information I need. I get the price of the day. I'm looking at the dividends, right? I'm very focused on the dividends, so I get my annual dividend amount. I get my ex-dividend date, which is important to me. As you can see, it's the 1st, so I'm looking for a nice dividend coming in relatively soon. Let's go out a little bit. Let's look at a 5-year. Just you can see where this company is. Me personally, I think this company is undervalued. I don't think people, for some reason, they're not realizing that this company has a lot of growth. They offer a really great dividend. I mean, yes, they don't have a long track history like some other REITs, like Realty Income Corp, which is also in my portfolio, and I will mention a little bit later. But this is the time to do it. This is the time to pick up a company like Apple Realty Corp because they're on sale, right? Once they get the track record, once the dividend starts growing and they get valued much higher, they're gonna be the value just won't be as great as it is right now. First off, I like to use Yahoo Finance. Yahoo Finance is a very robust tool that's gonna offer a lot of information right away, and this is gonna be really great. As you can see right here from the summary, I get all the information I need. I get the price of the day. I'm looking at the dividends, right? I'm very focused on the dividends, so I get my annual dividend amount. I get my ex-dividend date, which is important to me. As you can see, it's the 1st, so I'm looking for a nice dividend coming in relatively soon. Let's go out a little bit. Let's look at a 5-year. Just you can see where this company is. Me personally, I think this company is undervalued. I don't think people, for some reason, they're not realizing that this company has a lot of growth. They offer a really great dividend. I mean, yes, they don't have a long track history like some other REITs, like Realty Income Corp, which is also in my portfolio, and I will mention a little bit later. But this is the time to do it. This is the time to pick up a company like Apple Realty Corp because they're on sale, right? Once they get the track record, once the dividend starts growing and they get valued much higher, they're gonna be the value just won't be as great as it is right now. Looking at some of their charts here, as you can see that the information here is a little bit cleaner, and they spread it out, so it's nice. You get some of the you can be able to analyze some of the points along here, and just get a real good feel of how the overall progress of the stock is doing. Right now it's showing really low, but like I said, it's on sale. Okay, and this doesn't worry me. This encouraged me to actually purchase more, because when you really think about it, I mean, let's just think about that for a minute. This is offering a dividend of about 10 cents for $15, and Realty Income Corp is offering a dividend of 0.22 cents for about $70, $69, something like that right now. So look how much more that I would have to spend in order to get that same dividend yield. Now, if I just get 2 of the Apple Realty Corp stocks, I'm already right there, and I'm still at a discount. If I get 3, I'm still under the price of Realty Income Corp, and I surpass them with my dividend amount. So really think about that. You really want to look for value. You don't want a company that's paying a high yield just because, and then they're not going to pay it anymore, they're likely to cut it, or they're likely to go out of business. No, we're not looking for that. We're looking for a solid company that's offering a great dividend just to get out there, and then they're planning to grow it. You know, if you could see that they're earning good revenues, and that they have a good plan, and that they have steady growth that can be achievable given their market, which their focus is, then by all means you should buy in, because you're talking about a really good company here. You know, not everyone can be a dividend aristocrat right away. That takes time. So in order to get that time, in order to get that track record, yes, you pay for that. You pay when you pay a higher price when they're already established, and at that point. But if you get in when they're becoming established, when they're a good company and they're becoming a great company, then you can get that value. Anyway, let's move on a little bit. They have these tabs here. We're not going to really go into. We can check out the we can check out the statistics. I mean, it's kind of just other ways to analyze some of the financial data and comparison factors. Volume and return on assets and revenues and their balance sheet and stuff like that. This is going to be reiterative throughout different sites and throughout even the same site, but it's just different ways to look at it. And profile, you can look at the some of the executives here. You can look at their salaries here. I like that. It's kind of good to know what's going on and how these people are getting paid. So if you don't want a company that's over bloated, they're paying their employees way too much and they're paying their investors very little, right? Because they're trying to cover those salaries. So all right, they give you some information, just based on their headquarters and stuff like that. You can check out their main site, which we were just at. Financials, the same thing that I said before. Now this is a good way to look at look at those SEC filings that we just talked about. Like, what's that information in there? It'll be here, and it's a lot easier. You don't have to go through like almost 100-page document. You can just go to this page and you can do a quick scan and get the information. You make sure that are they operating at a loss, or are they making profit? Okay, they are, and this is good. And let's see what else they're doing here. So then that's when you want to dig into other documents that I had talked about before. The analysis. We don't really need to go into that. Opinion. This one I do like. I like the holders. I like to see who else is interested in the stock and how interested they are in the stock. This is a nice tab. I like this because if you look here, you have Vanguard Group, you have Charles Schwab, a lot of Vanguard fund REITs here. I'm sorry. Here we go. Yeah, a lot of Vanguard different funds here. and you can see how much they're holding. And I like knowing that, because I like to see how confident other big investment firms are. And you also want to make sure you don't have overlap. If you're getting into a Vanguard REIT fund or something like that, and you're also buying these stocks, you might be overexposed in a particular sector that you might not want. You might get overexposure that you might not want, and it's good to just keep that in mind. What's going on? Like if you're invested in both those types of REIT focused areas, then you don't have any overlap that you might not want. So it's important to know that. And it's also important to know this information, because if all of a sudden Vanguard Group decides to change their position or sell, that could drastically affect the overall purchase or the stock price, and it could also affect it's going to affect your holdings indirectly. So if they do kind of make any shifts in either buying more or less or selling, you kind of want to get an idea of that. And yeah, so that's for the Yahoo kind of it's a really great tool. They offer different they offer a package so that you can get more analytical tools, more analysis, and you have to pay for that. But what they offer here for free is great. So this is pretty much all you would need. If you stopped right here, you'd be fine. You wouldn't even need to go further. But there are other also tools to use on top of this. The other tool that I like to use is Seeking Alpha. Now, I primarily only use this tool for the dividend information. I like the articles here. I definitely engage in the articles within this site, but primarily I'm really interested in just getting a quick snapshot in my mind of what's going on with their dividend. I can see their yield, I can see their annual, I can see the amount, and I can see the frequency and their ex-dividend date, which is super important. And if you don't know what the ex-dividend date is, this is the date you need to own that stock in order to get the payout. So if the second comes and you buy the stock on the second, you're gonna have to wait until the next first of the month, which will be in September, in order to get that dividend. So maybe if your timing's off, or if you had planned on getting that dividend at a certain time, you might be using a lot of your capital and buying it when you could buy something else. There's always an opportunity cost when buying something, and I'm going to talk about that a little bit more later. So you get this snapshot here, and then you go right over here to the dividend history. You can see that we are looking at the entirety of the history. Like I said, they haven't been out as long as some other companies like Realty Income Corp, but they have to get there at some point. All companies have to start somewhere. So you see that they're consistent with their dividend, right? You see that they constantly, monthly, same amount, and what you're hoping on is that they maintain their growth. And if they maintain the growth, they're likely to increase their dividend. There's no reason for them not to increase it, right? They have to pay this money out regardless. So if they're making more money, right, they have to meet their regulations. They're going to be paying out somewhere around maybe 90% of their profits. So when they increase in revenues and they grow like that, then your dividend will increase. It's just that simple. So it's good to come over here and just get a good look. This doesn't have a very long history, and it doesn't change. So far, you don't see that much change, but other companies will show you that type of change, and you might want to know what's going on right there. Let's just use an example here. So here we have Realty Income Corp, another stock on the New York Stock Exchange, And if we look at their history, you can see here that it's a steady growth, and it's with their dividends. So all monthly. Now keep in mind, some companies they go from quarterly to monthly, so that they look like they're dropping in value, or dropping their monthly dividend, but they're actually not. They're just kind of dispersing it out so that it comes in monthly instead of quarterly. And like I said, visually, this is very pleasing. You can see the growth here very consistently, and like I said, they're over 20 cents now. Let's go check out their scorecard real quick. See, but their dividend yield is it's a little less than half what Apple Realty Corp is offering, and their price is almost 4 times the amount. So if you yes, they are a good company, and for what they have in their history, there's no indication why they wouldn't keep growing and keeping a great machine that's just producing dividends. But I still think this company, you're not getting the same amount of value right away. You will get the value, give it time. If the stock price drops a little bit, and you're able to pick up some more shares at that point, or if the dividend's still increasing, you're able to make up some difference there. But like I said, the value from the moment you buy Apple Realty Corp is there. The on the other hand, with the Realty Income Corp, that value it grows if you hold it long enough. It will come as you hold it. So let's go back. Here's Apple Realty Corp, and then the final one of the final tool that I'm going to go over today is going to be a very simple tool, and that's Google Finance. Google Finance is a very clean look at the stock. You would even probably start here first. You just plug it in right in the search bar, and then you can just look at the company. Let's go a little bit wider out. You look at the company, and you can see, okay, what kind of information do I need to know? Okay, great. Go to their finances. You check out their financials. Oh, this is looking good, right? We've already kind of reviewed all these kind of a little bit before, so I'm not going to go into it again. But yeah, you just do that. But the main feature as to why I like plugging it in here is because the compare. Okay, so what you're doing here is you're going to plug in O or Realty Income Corp, and you're going to get a comparison against Apple Hospitality REIT, and you're going to see what's going on here. Now, this is very important because you have opportunity costs, like I mentioned before. Your opportunity cost means that if you're going to put your capital and use it to buy Apple Hospitality REIT, you can't use it to buy Realty Income Corp. Now, you could do some type of ratios and different things like that, but it really depends on what your goals are and what your portfolio, what your projected aim is regarding your dividends. Now, if you're more focused about keeping your portfolio stable, maybe with their capital appreciation, so you don't lose too much there, but you also want to grow your dividend, you might want to go with a Realty Income Corp. However, if you're trying to maximize your dollar and really grow your dividend fast, you're going to go with Apple Hospitality REIT, as you can see what we did in the portfolio. Now, if I go down here a little bit, I can see some information like the market cap here, and considering, if you see how much they're operating at Apple Hospitality REIT is much lower than Realty Income Corp. You see that their employee base is lower, and you see that their dividend yield is almost double, if not a little bit more, double than Realty Income Corp. So you're getting a great value there. And so I'm going to be sitting down and I'm going to say, okay, I can either get 10 shares of Realty Income Corp, or maybe 20, 30, or 40 shares of Apple Hospitality REIT. Why would I do that at that particular time? Is the company, which company is stronger? And you know, is the yield threshold, you know, something that I'm comfortable with, right? So I'm taking more of a risk because this company, Apple Hospitality REIT, is not as proven a Realty Income Corp. So yeah, that's kind of the trade-off. That's what you're paying into right now. You know, they're an established company, they have a long track history, and they're desirable, and that's why you would pay more, and that's fine. There's nothing wrong with that. I still think it's a great. I think it's a good deal, right? I think it's a good deal, and if you hold it for a long time, then it becomes a great deal. So that's what I'm looking at there. But like I said before, your value as soon as you buy Apple Hospitality REIT, you get value. Hey guys, let me know in the comments below. You can just put in the ticker symbol or something like that, Apple or Realty Income Corp. Let me know which company you like. If you have either one of these in your portfolio, then just let me know. Just put that in the comments below. I like to check it out. It gives me kind of a good sense of people who are watching and what they're interested in and what they have in their portfolio. It's a really interesting topic. So let me know down below. And let's just take a look at their portfolio. Okay guys, we're back in the portfolio. Now, I tried to record this a few times and I've had some issues with the recording, so I had to re-record, which was well, it's fine, you know, it happens from time to time, but I'm kind of giving you a foreshadow because what you're seeing here, this part of the portfolio, will be in the next episode, and I'm not going to go into the overall gains and stuff like that now, but you'll see in the next video when I do a recap, and you'll see how I'm doing. As you can see, the market was pretty harsh today, but it's okay. You know, it happens. I'm looking at under 3% down, which can be easily made up in a day, and I've definitely had that happen to me. One of the things I haven't really mentioned is that I do have other portfolios. I actually have a portfolio with Robinhood and different things like that. I just have not put those I haven't put it up, and I'm focusing more on this particular portfolio because I'm focused on this particular strategy, and I want to share this. And like I said, this is really for people to get motivated into investing. It's not to just show you, hey, look how much I have invested, but really to kind of show you the process, show you what you would look at and how you'd go about it in a methodical way with strategy, so that you can be able to do this on your own, in your own way, with whatever you're setting out to do, especially if you're focused on dividends. So guys, please give this video a like, comment down below. I want a conversation. I want to be able to talk to you guys about investing, and don't forget to subscribe so you can get my videos as I post them, and hit the notification bell so that you know when I post them. Anyway, that's going to be it from me, and until next time.